What if I told you that the difference between a $100 trader and a millionaire isn't luck? It's mindset. Today, you're about to discover the exact ways small accounts grow into massive wealth. Not by guessing, not by following signals, but by thinking, acting, and trading like the 1%. Introduction. The Millionaire Mindset. Blueprint. Every great success story begins with a mindset shift. Long before the money comes, long before the charts make sense, long before the strategy is perfected, there is a decision. A decision to think differently. A decision to stop looking at what you have right now and start focusing on who you must become. When it comes to trading, people believe the secret lies in strategies, signals, or market timing. They think that if they just had the right technical setup or insider knowledge, the doors of wealth would swing open. But the truth is this: trading success starts in the mind, not in the market. The charts are the same for everyone. The prices are the same for everyone. The platforms are the same for everyone. What separates the trader who turns a small account into a fortune from the trader who loses everything is not the market. It is mindset. This book is called The Mindset That Turns $100 Traders into Millionaires for a reason. Because the greatest wealth does not begin with a massive investment. It begins with small capital, big dreams, and the right mental framework. The $100 Trader's Dilemma. Let's be honest. Most traders start small. They begin with $100, maybe $200, hoping it will grow into something life-changing. And yet for most, that $100 disappears faster than they ever imagined. The dilemma is simple. Small capital feels limiting. It feels like a cage. You want to grow fast. You want to double it, triple it, flip it into something bigger. And because of this urge, most $100 traders gamble instead of trade. They risk too much. They over-leverage. They chase quick profits. But here's the harsh truth. If you cannot manage $100 with discipline, you will never manage $10,000 or $100,000. The number in your account does not change who you are. The mindset you bring to trading does. Think of it like this. If you hand someone who is careless with money $1 million, it will vanish quickly. If you give that same million to someone disciplined, patient, and strategic, it will grow even larger. It's not the money that matters. It's the mindset. Skill beats. Luck is a dangerous illusion in trading. Many beginners confuse a lucky win with real skill. They think one big trade makes them a genius. They celebrate too soon. They ignore the risks. And eventually, the market humbles them. On the other hand, skilled traders understand that trading is not about one lucky moment. It's about consistency. It's about stacking small wins and avoiding devastating losses. Skill is built through practice, patience, and discipline. A lucky trader may win once. A skilled trader wins for life. That is the difference. The power of discipline and habits. Think of trading like building muscle. You don't get strong by going to the gym once and lifting the heaviest weight you can find. You get strong by showing up day after day, by sticking to a routine, by practicing the basics until they become second nature. The same is true for trading. Discipline is the backbone of success. Habits are the building blocks of wealth. If you train yourself to follow rules, stick to risk management, and stay patient, you are already ahead of 90% of traders who let their emotions control them. This is why starting small is not a curse. It is a blessing. A $100 account is not just about money. It is about training. It is your practice ground. It is where you build the habits that will one day allow you to handle a 6- or 7-figure account with confidence. What this audiobook will teach you. This audiobook is not about hype. It is not about shortcuts. It is about giving you the mindset, blueprint to go from small beginnings to financial mastery. We will break down why most traders fail and how you can avoid their mistakes. We will talk about emotions, risk management, strategy, discipline, and the long game. We will uncover the habits that separate millionaires from the masses. And most importantly, we will equip you with the mental framework to think, act, and grow like a successful trader, even if you are starting with only $100. By the time you finish this audiobook, you will no longer look at trading the same way. You will no longer chase luck. You will no longer gamble with your future. Instead, you will see yourself as a professional trader in training, someone who understands that small beginnings carry the seeds of great success. So, let us begin this journey, not with charts, not with numbers, but with the most powerful tool you will ever have in trading, your mind. Chapter 1. The Foundation. Thinking like a millionaire. Before you earn $1. Before you can hold $1 million in your hand, you must first be able to hold the mindset of a millionaire in your mind. This is the foundation of trading. Success, and it is where most beginners fail. They rush into the market with dreams of fast profits, but they lack the discipline, patience, and clarity required to survive. The market is a battlefield. And in battle, the weapon you carry matters far less than the mindset you bring. Two traders can look at the same chart, enter the same trade, and walk away with opposite results, not because of the chart, but because of their mindset. So before we talk about strategies, before we dive into techniques, we must start here. With the foundation, with your mind. Why mindset comes before money? Let's ask a simple question. Why do lottery winners often go broke within a few years? They received millions overnight, yet they lose it all. The answer is simple. They never developed the mindset to manage money. They thought like spenders, not like builders. The same principle applies in trading. If you give a gambler a $100 account, they will gamble. If you give them $100,000, they will gamble even more, only with bigger losses. But if you give a disciplined, patient trader even a small account, they will treat it like a business. They will protect it, grow it, and respect every dollar. That is why mindset comes before money. Because money does not change who you are. It only amplifies who you already are. If you are reckless with $100, you will be reckless with $10,000. If you are disciplined with $100, you will be disciplined with $10,000. Think about it like this. Imagine planting a tree. If the roots are weak, it doesn't matter how tall the tree grows. It will collapse under pressure. Your mindset is the root system of your trading journey. Without it, no amount of money will keep you standing. The psychology of growth versus scarcity. At the heart of trading success lies a choice: growth mindset or scarcity mindset. A scarcity mindset whispers, I don't have enough. I need to double my account fast. I can't afford to lose. This way of thinking creates desperation, and desperation leads to mistakes. You start chasing trades that aren't there. You risk more than you should. You panic when the market moves against you. Scarcity makes you weak. A growth mindset, on the other hand, says, I may not have much now, but I can grow. Every trade is practice. Every mistake is a lesson. Every small win is progress. With a growth mindset, you stop obsessing over fast results and start focusing on building skills. Let's compare the two. The scarcity trader sees $100 and feels trapped. They think, I can't do anything with this small amount. I need to flip it fast. The growth trader sees $100 and feels opportunity. They think, this is my training ground. If I can master trading with $100, I will be unstoppable when I manage larger capital. The difference between these two traders has nothing to do with the size of their account. It has everything to do with the size of their mindset. Why most $100 traders blow their accounts? Now let's face a hard truth. Most traders who start with $100 will lose it all. Not because the market is unfair, not because the broker is against them, but because of their own decisions. Here are the common reasons. Over-leverage. A $100 account feels small, so traders try to multiply it quickly. They use high leverage, risking 50% or even 100% of their account on one trade. A few wrong moves, and the account is gone, chasing signals. Beginners jump from one strategy to another. They follow random signals, copy other traders blindly, and never develop their own system. This lack of consistency destroys accounts. Emotional trading. Fear and greed take control. A trader who sees a small profit closes too early, missing long-term gains. A trader who sees a loss holds on, hoping it will reverse, only to watch the account sink deeper. No plan. Most $100 traders have no written plan. They enter trades randomly, exit randomly, and hope for the best. Hope is not a strategy. The result is predictable. Accounts blow up. Confidence shatters. Many quit before they ever understand the truth. The money wasn't the problem. The mindset was. Building patience, discipline, and self-control. If most traders fail because of mindset, then success must also begin with mindset. The qualities you need are not secret. They are timeless. Patience, discipline, and self-control. Patience means waiting for the right setup instead of forcing trades. It means accepting that wealth is built slowly, not overnight. A patient trader knows that missing a trade is better than chasing a bad one. Discipline means following your rules every single time. If your plan says risk only 2% of your account, discipline means sticking to that rule, even when you feel tempted to risk more. Discipline is what keeps you safe when emotions try to take over. Self-control means mastering yourself before mastering the market. It means not letting fear drive you to exit too soon or greed push you to hold too long. It means knowing that your greatest enemy is not the chart. It is your own impulses. Together, these qualities form the foundation of a millionaire mindset. Without them, even the best strategy will fail. With them, even a small account can grow steadily over time. Case studies. Small traders who grew big. Let's look at some real examples. Case study 1. The Patient Builder. There was once a trader who began with just $250. Instead of trying to double it overnight, he treated it as a classroom. Every trade was documented in a journal. Every mistake was studied. Every win was analyzed. In 2 years, that $250 grew into $20,000. Not because of luck, but because of discipline. Today, that trader manages 6 figures and teaches others the power of slow, steady growth. Case study 2. The Gambler Who Lost It All. Another trader started with $100 and wanted to turn it into $1,000 in a week. He risked 50% of his account on the first trade. He doubled his money once, then lost it all the next day. Instead of learning, he deposited another $100, repeating the same cycle again and again. After 10 attempts, he gave up, having lost $1,000, all because of impatience. Case study 3. The Silent Millionaire. One trader began with $500. He didn't brag on social media. He didn't chase signals. He focused on risk management, aiming for just 1–2% growth per week. It seemed slow, almost boring. But over the years, the account grew. Compounding did its magic. Today, he quietly manages over $1 million. While others searched for shortcuts, he built habits. These stories highlight one truth. The path from $100 to $1 million is not fast, but it is possible. The deciding factor is not the market. It is the mindset of the trader. Final thoughts for this chapter. The foundation of trading success is not a secret strategy or a lucky break. It is the mindset you bring to the market. If you want to be a millionaire trader, you must start thinking like one long before the money arrives. Adopt a growth mindset. Protect your capital like it is your lifeline. Build patience, discipline, and self-control until they become second nature. Treat your $100 account not as a limitation, but as your training ground. Because here is the ultimate truth. If you cannot manage a small amount with wisdom, you will never manage a large amount with success. But if you can master the art of trading with $100, you are already becoming the kind of trader who can one day manage millions. That is the foundation. That is where your journey begins. Chapter 2. The Enemy Within. Mastering emotions in trading. The market is not your greatest enemy. The charts are not your greatest enemy. Not even your broker is your greatest enemy. Your greatest enemy stares back at you in the mirror. It lives in your mind. It whispers in your decisions. It shows up in your fear, your greed, and your doubt. Most traders believe they lose because they picked the wrong stock, entered at the wrong time, or missed the right setup. But if you look deeper, you will see the truth. They lost because their emotions took over. They lost because they acted out of impulse, not discipline. This is why mastering emotions is not just important. It is essential. If you do not control your emotions will control your account. Fear, greed, and doubt. The three killers of trading accounts. Let us begin with the three emotions that destroy most traders: fear, greed, and doubt. Fear is the voice that says, "What if I lose?" It makes you hesitate when you should act. It makes you exit too early, grabbing a small profit while leaving bigger gains on the table. Fear makes you second-guess your plan, even when the setup is perfect. Greed is the opposite. Greed whispers, "Just a little more." You see a profit, and instead of taking it according to your plan, you hold on, hoping for more. Often that profit turns into a loss. Greed also tempts you to risk more than you should, convincing you that one big win will change everything. Doubt is the silent killer. Doubt makes you abandon your strategy after one loss. Doubt makes you jump from system to system, always searching for the perfect one that never exists. Doubt eats away at your confidence until you no longer trust yourself. Together, these three emotions, fear, greed, and doubt, are responsible for more blown accounts than any market condition. They do not live in the charts. They live in you. And unless you face them, they will sabotage your every step. The difference between gambling and calculated risk, one of the clearest signs of emotional trading, is the way beginners confuse gambling with calculated risk. A gambler enters a trade hoping it will work. They put money down without a plan, without understanding the odds, without knowing when to exit. A gambler thrives on excitement. They feel alive when they win, crushed when they lose, and they keep repeating the cycle until the account is gone. A professional trader, on the other hand, takes calculated risks. They understand that every trade is uncertain, but not every trade is random. They have studied their setup. They know the probability of success. They know exactly how much they can afford to lose. They treat each trade like a business decision, not a roll of the dice. The difference lies in mindset. Gambling is driven by emotions, by hope, fear, and greed. Trading with calculated risk is driven by discipline, by logic, planning, and consistency. When you approach the market, ask yourself, am I gambling or am I trading? The answer to that question will determine your long-term success. How emotions trick traders into losses. To truly master emotions, you must understand how they trick you. Emotions do not show up as loud voices. They sneak in quietly, convincing you that you are being logical when, in fact, you are being reckless. Fear convinces you to close trades too soon. You tell yourself you are protecting profits, but in reality, you are sabotaging your plan. Greed convinces you to risk more. You tell yourself this setup is different, that it's guaranteed, but deep down, it is just greed pushing you to break your rules. Doubt convinces you to abandon good strategies. You lose one or two trades and suddenly believe your system doesn't work, even though no strategy wins 100% of the time. These emotional tricks are dangerous because they feel rational in the moment. You believe you are making the smart choice, when in fact, you are being manipulated by your own mind. This is why traders often say, "The market is against me." But the truth is, the market is neutral. It doesn't care about you. It doesn't know you exist. The real battle is within you. Techniques to master emotional control. The good news is this: Emotions can be managed. They may never disappear completely, but they can be tamed. Here are techniques that will help you build emotional control. Create a trading plan and stick to it. Your plan should include when to enter, when to exit, how much to risk, and what setups you will trade. Once the plan is written, your job is simple. Follow it. The plan is your shield against emotions. Risk small enough that you don't fear losing. If losing one trade feels painful, you are risking too much. Lower your position size until a E. Loss feels like a paper cut, not a deep wound. This reduces fear and allows you to think clearly. Journal every trade. Write down why you entered, why you exited, and how you felt during the trade. Over time, patterns will emerge. You will see how emotions influence your decisions. Awareness is the first step to control. Use timeouts. If you lose control, if you take a big loss, if you feel angry, if you feel desperate, step away. Close the platform. Take a walk. Reset your mind. Never trade when emotions are in control. Practice mindset training. Outside the market, discipline in trading often reflects discipline in life. Meditation, exercise, and daily routines all strengthen your ability to stay calm under pressure. The more control you build outside the charts, the more control you will have inside them. Becoming unshakable in high-pressure moments. Every trader faces high-pressure moments. The trade is moving fast. Your heart races. Your palms sweat. Your mind screams, "Act now." In these moments, average traders panic. They abandon their plan. They chase. They exit too soon. They overreact. But elite traders remain unshakable. They have trained themselves to stay calm under pressure. They trust their system. They follow their plan. They understand that one trade does not define them. Becoming unshakable is not about removing emotion entirely. You are human. You will always feel fear and greed, but you can learn to act in spite of them. You can learn to recognize the emotions, acknowledge them, and still choose discipline. Think of a pilot flying through turbulence. The passengers may panic, but the pilot remains calm because they have trained for this moment. They trust their instruments. They follow procedures. That calmness is what brings the plane safely to its destination. As a trader, you must be the pilot of your account. The market will always bring turbulence. Your job is to remain calm, disciplined, and focused. That is how you survive. That is how you grow. Final thoughts for this chapter. The enemy within, fear, greed, and doubt, will always try to control you. They are part of human nature, but in trading, they can be deadly. The difference between the gambler and the professional is not knowledge of the market, but mastery of emotions. The professional does not trade without fear. They trade despite fear. They do not avoid greed completely. They learn to recognize it and resist it. They do not eliminate doubt entirely. They learn to trust their plan more than their impulses. If you want to grow from a $100 trader to a millionaire trader, mastering your emotions is non-negotiable. It is not something you add later. It is the core of who you must become. Remember this: strategies may change, markets may change, but your discipline and emotional control are forever. Build them now, and you will be unshakable in the years to come. Chapter 3. Risk like the rich: how millionaire traders manage small accounts. Ask any experienced trader what the most important skill in trading is, and they will not tell you it is strategy. They will not say it is predicting the market. They will tell you it is risk management. This surprises beginners. They believe the secret to success is finding the perfect entry or the magic indicator. But professionals know the truth. Strategies will fail sometimes. Markets will surprise you. Nothing is certain. What keeps you alive, and what allows you to grow, is how you manage risk. Think of it like this. In the game of trading, survival comes first. If you blow your account, the game is over. But if you protect your capital, you always have another chance. And with time, practice, and discipline, those chances add up to success. This chapter is about learning to risk like the rich, even if your account is small. Because if you can protect and grow a $100 account, you are building the habits that one day will allow you to manage $100,000 or more. Why risk management is more important than strategy. Let's start with a simple question. If two traders use the same strategy, why does one succeed while the other fails? The answer is not luck. It is risk management. Imagine two traders with the same setup. Both enter the same trade. One risks 50% of their account. The other risks only 2%. The market goes against them. The first trader loses half their account in one move. The second trader loses almost nothing and can continue trading without fear. The lesson is clear. Even the best strategy will fail if you risk too much. And even a simple strategy can succeed if you manage risk correctly. In fact, many professional traders say this: it's not about how much you make when you win, it's about how little you lose when you're wrong. Risk management is the invisible skill that keeps millionaires in the game while beginners burn out. Position. Sizing, the secret weapon of successful traders. The heart of risk management is position sizing. This is how you decide how much money to put into a single trade. Beginners often ignore this. They throw random amounts at the market, sometimes $20, sometimes $50, sometimes their whole account. This inconsistency guarantees disaster. Professionals are different. They use math, not emotion. They decide in advance, I will risk only 1% or 2% of my account on each trade. Here's how it works. If you have a $100 account and risk 2% per trade, you are risking just $2. That may sound small, but the point is survival. With this system, even if you lose 10 trades in a row, you've lost only 20, not your entire account. More importantly, you can keep trading, keep learning, and keep improving. Position sizing is the shield that protects you from destruction. It keeps your losses small and controlled. It allows you to stay in the game long enough for your edge to show. Think of it as building a wall around your capital. Every time you size your positions correctly, you are telling your emotions, I am in control. I decide how much I can lose. I am trading with discipline. This is the secret weapon of successful traders. It may not be exciting. It may not make you rich overnight, but it is what makes long-term success possible. How to protect a $100 account from blowing up now. Let's get practical. How do you protect a small account like $100? Risk 1-2% per trade. Never risk more than 1-2 per trade. This feels slow, but it keeps you alive. Remember, trading is not about doubling your money overnight. It's about growing steadily. Always use stop-loss orders. A stop-loss is not optional. It is your safety net. It ensures that one mistake does not destroy your account. Place your stop-loss where your trade idea is proven wrong, not where it feels safe. Avoid over-leverage. Leverage is a double-edged sword. It can multiply gains, but it also multiplies losses. With a small account, use the lowest leverage possible. Think survival first, profit second. Focus on consistency, not size. The purpose of a $100 account is not to get rich. It is to practice risk management, discipline, and consistency. Treat it like a training account. Protect it as if it were $100,000. If you learn to manage risk with $100, scaling up will be natural. But if you blow up small accounts again and again, you are teaching yourself bad habits that will haunt you when you trade larger amounts. Millionaire mindset, protecting capital. First, profit second. There is a saying among professional traders, take care of your losses, and the profits will take care of themselves. Millionaire traders do not focus on chasing huge wins. They focus on protecting their capital. Why? Because they know that as long as they have money in the account, opportunities will always come. Think about it like a boxer in the ring. The best fighters don't just throw punches, They protect themselves. They defend. They block. They stay patient. They know the fight is won not by rushing, but by surviving and striking at the right time. In trading, your capital is your lifeline. Protect it with everything you have. If you lose it, you are out of the game. But if you keep it safe, the profits will come naturally over time. This is why the millionaire mindset is different from the beginner's mindset. Beginners ask, how much can I make on this trade? Millionaires ask, how much can I afford to lose? This shift in thinking is what keeps them successful long after others have quit. The compounding effect, how small, safe gains build. Wealth over time now. Let's talk about the most powerful force in trading, compounding. Albert Einstein once called compounding the eighth wonder of the world. In trading, it means growing your account slowly and steadily, letting your gains build on top of each other. Here's an example. Imagine you have a $100 account. You aim for just 2% growth per week. That sounds small, doesn't it? Just $2. But let's see what happens. After 1 year, that $100 can grow to around $280. After 2 years, it becomes $800. After 3 years, it becomes $2,400. After 5 years, it becomes over $25,000. After 7 years, it becomes over $200,000. And in 10 years, it can cross $1 million all us, from starting with just $100, aiming for 2% per week. This is the power of compounding. It is not fast, it is not flashy, but it is real, and it is how millionaire traders think. They do not gamble for overnight riches. They focus on steady growth, letting time do the heavy lifting. They understand that trading is not a sprint. It is a marathon. Final thoughts for this chapter: risk. Management may sound boring compared to strategies and signals, but it is the true secret of trading success. If you want to grow a $100 account into something much larger, forget about chasing jackpots. Forget about risking everything for one big win. Instead, learn to risk like the rich. Protect your capital above all else. Master position sizing. Keep your losses small. Let compounding do its work. The millionaire mindset is not about greed. It is about survival. It is about discipline. It is about playing the long game. Remember this. Trading is not about how much you make when you win. It is about how much you protect when you lose. That is the foundation of wealth. That is how small accounts grow into fortunes. Chapter 4. Strategy over signals. Building a system that works for you. Every new trader starts the same way. Searching for the magic signal, the golden indicator, the secret alert that will guarantee profits. You see it on forums, Telegram, groups, and YouTube videos. Follow these signals and you'll make money. But here's the truth. If signals alone could make you rich, everyone would already be a millionaire. The reality is, chasing signals will keep you broke, because you are not learning how to think. You are only learning how to follow. Why chasing signals and tips will keep you. Broke signals make trading look easy. Someone tells you when to buy, when to sell, and you just click. But what happens when the signal is wrong? What happens when the market changes? What happens when the person you follow disappears? You are left with nothing. No skill, no understanding, no confidence to make your own decisions. You are not a trader, you are a follower. This is why most traders who rely only on signals end up blowing their accounts. Because trading is not about copying, it's about creating. It's about building something you can trust, even when the market gets unpredictable. The power of a personal trading system. A real trader has a system. A system is not magic. It's not complicated. It's simply a set of rules that guide your decisions. When to enter, when to exit, how much to risk. Your system is like your playbook. It gives you structure. It protects you from emotional decisions. It keeps you consistent. Think of a professional athlete. They don't show up to the game and guess what to do. They have a playbook. They practice their moves until they become automatic. Trading is the same. Without a system, you are guessing. With a system, you are prepared. How to find an edge in the market. The secret to building a trading system is finding an edge. An edge is simply something that increases your chances of success over time. It doesn't have to be 100% perfect. It just has to give you a consistent advantage. For some traders, the edge comes from technical patterns, simple setups like breakouts or pullbacks. For others, it comes from understanding fundamentals, like economic news or earnings reports. Some traders even find their edge in psychology, taking advantage of how the crowd reacts in predictable ways. Your goal is not to copy someone else's edge. Your goal is to test, practice, and discover what works for you. Because when you believe in your system, you can stick with it. Simplicity over complexity. One of the biggest mistakes traders make is chasing complicated strategies. They think more indicators, more lines, and more analysis will make them smarter. In reality, it just makes them confused. Millionaire traders know the truth. Simple works. A clean chart. A few rules. A clear plan. That's all you need. Complexity feeds doubt. Simplicity builds confidence. If you can explain your system in a few sentences, you are on the right track. Case study. Turning simple setups into long-term profits. Let's look at an example. A trader named Daniel started with $250. At first, he tried everything: multiple indicators, complicated strategies, and paid signal groups. He lost money. Then he simplified. He built a system around one idea: trading breakouts from key support and resistance levels. His rules were simple. Wait for the breakout. Confirm with volume. Risk only 2% per trade. It wasn't flashy. It wasn't exciting. But it worked. Over time, Daniel grew his account not by chasing signals, but by mastering a system he trusted. What made him successful? Building your own playbook. Here's the challenge for you. Stop chasing signals. Stop jumping from strategy to strategy. Instead, commit to building your own playbook. Write down your entry rules. Write down your exit rules. Define your risk per trade. Backtest your system on historical data. Practice it in demo accounts. Refine it until it feels natural. When you have your system, you no longer depend on luck. You no longer depend on other people. You depend on yourself. And that is when trading becomes powerful. Final thoughts. Signals may give you a trade, but a system will give you a future. The traders who grow small accounts into millions are not the ones chasing tips. They are the ones who master their own edge. They build simple, effective strategies. They trust their playbook, and they repeat it with discipline. In the end, strategy over signals is not just a trading principle, it's a life principle. Don't copy someone else's path. Build your own, because the only strategy that will work for you is the one you truly believe in. Chapter 5. The Discipline Code. Habits that build trading. Success. Every trader wants freedom. Freedom from a job. Freedom from financial stress. Freedom to live life on their own terms. But here's the paradox. The only path to freedom is discipline. In trading, discipline is not optional. It's the foundation of success. Without it, even the best strategies fail. With it, even simple approaches can turn small accounts into wealth. The routines of successful traders, if you study millionaire traders, you'll notice something interesting. They don't just have good strategies, they have good routines. Their success is not built on one lucky trade. It's built on habits repeated every single day. Some traders start the morning by reviewing market news. Others check overnight, price action, or update their watch list. Many journal yesterday's trades to see what went right and what went wrong. These routines create structure. They reduce stress. They make trading less about emotion and more about process. Think about a pilot. Before every flight, the pilot goes through a checklist. Even if they've flown the same plane for 20 years, they don't skip it. Why? Because routine prevents disaster. Trading is the same. A consistent routine protects you from mistakes that cost money. Motivation is temporary. It fades. You can watch a video that inspires you today, but tomorrow the feeling might be gone. Motivation can push you to start, but only discipline can push you to continue. This is why most traders fail. They start with energy. They open their account, deposit $100, and think, "This is the beginning of my millionaire journey." But as soon as they hit a losing streak, their motivation disappears. Discipline, however, does not depend on feelings. Discipline is doing the right thing even when you don't feel like it. It's following your trading plan when fear tells you to exit too soon. It's staying patient when greed whispers, "Double your risk this time." Motivation is a spark. Discipline is the fire that keeps burning. Creating a trading plan. You never break if discipline is the engine. Your trading plan is the roadmap. Without a plan, you are just wandering. With a plan, you have direction. A trading plan should answer 3 simple questions. When will I enter? When will I exit? How much will I risk? That's it. Clear rules. No guessing. No changing your mind in the middle of a trade. Here's the real secret. It's not enough to write a plan. You must commit to never breaking it, even once. Because the first time you break your plan, you tell yourself it's okay to bend the rules. And from that point, discipline slowly erodes. Professional traders treat their plan like law, non-negotiable. Absolute. If the setup isn't there, they don't trade. If the stop loss is hit, they exit. No hesitation, no excuses. That's how discipline is built, not in big moments, but in small choices repeated over and over. Journaling trades, the overlooked millionaire habit, one of the most powerful habits. In trading is also the most overlooked, journaling. A trading journal is not just a notebook of wins and losses. It's a mirror. It shows you your behavior, your strengths, and your weaknesses. Write down every trade. Why you entered, why you exited, how you felt during the trade. Did you follow your plan? Did emotions interfere? At first, this may feel boring, but over weeks and months, the patterns become clear. You'll see mistakes you repeat. You'll see strategies that work better for you. You'll see how emotions creep in at certain times. This feedback is priceless because it allows you to adjust, refine, and improve. Think about it. Athletes watch recordings of their games to see where they went wrong. Musicians listen to their own performances to improve. Traders should do the same. Some of the greatest traders in history kept detailed journals. And when they became successful, they didn't stop. Because they knew journaling wasn't just about tracking trades, it was about mastering themselves. How small daily actions lead to life-changing results. Here's a truth most traders don't realize. It's not the big trades that make you rich. It's the small habits you repeat daily, when you stick to your plan, when you journal your trades, when you review your mistakes, when you refine your strategy, when you protect your capital. These small actions compound over time, just like interest in a bank account. Discipline compounds. Each day you follow your rules, you strengthen your mindset. Each day you keep discipline, you grow not just as a trader, but as a person. One day, you'll look back and realize that what seemed small was actually the secret. Case study: the trader who grew through habits. Consider Sarah. She started trading with $150. At first, she struggled like everyone else. Losses frustrated her. Wins made her overconfident. But instead of giving up, she focused on habits. She created a daily routine. She made a trading plan with strict rules. She journaled every single trade. Months later, her account had not grown much, but her discipline had. She was no longer emotional. She was no longer guessing. She was consistent. Over the next year, Sarah's account started to grow steadily. Not because she found a secret strategy, not because she followed signals, but because her habits created the foundation for success. This is the discipline code. Habits before profits, process before outcome. Final thoughts: if you want to become a millionaire trader, start with discipline, build routines, follow your plan, journal your trades, repeat small actions daily. Remember this: discipline is freedom. The freedom to trust yourself, the freedom to grow your account, the freedom to create the life you want. Motivation might start your journey, but only discipline will finish it. And if you master the discipline code, nothing can stop you. Chapter 6. The Long Game, from $100 to $1,000. Everyone wants to get rich fast, but let me tell you a secret. The traders who last, the ones who build true wealth, don't chase overnight riches. They play the long game. The long game is about patience. It's about discipline. It's about understanding that small steps forward compound into massive results over time. If you can master this mindset, you can turn $100 into $1,000. Not through luck, not through gambling, but through the power of consistency. Why slow? Growth beats overnight riches. Imagine two traders. The first one, Jake, wants quick success. He risks half his account on every trade. When he wins, he feels like a genius. When he loses, his account is cut in half. He's constantly on an emotional roller coaster. The second trader, Maya, plays it safe. She risks just 1% to 2% of her account each trade. Her growth is slower. It's not exciting, but it's steady. Fast forward 1 year. Jake has blown up his account. Maya's account is growing, small but consistent. Now fast forward 5 years. Jake has quit trading, convinced the market is rigged. Maya? Her account has multiplied many times over. This is why slow growth wins. Overnight riches may look attractive, but they usually end overnight too. Real wealth takes time, but it also lasts. Understanding compounding and exponential growth. Albert Einstein once called compounding the eighth wonder of the world. And he was right. Compounding is simple. You make a small gain, and then you use that gain to earn more gains. Over time, the growth becomes exponential. Let's say you start with $100. If you grow just 2% a week, in 1 year that account is $280. Not much, right? But keep going. In 5 years, that $100 becomes over $7,000. And in 10 years, over $500,000. The numbers look impossible at first, but they're real. The secret isn't speed, it's consistency. Think of compounding like a snowball rolling down a hill. At first it's small. You can barely see it growing, but as it rolls, it collects more snow. It gets bigger. It grows faster. Eventually, it becomes unstoppable. That's your trading account, if you play the long game. How to scale your account. Step by step. Scaling a trading account isn't about jumping from $100 to $1,000 in one move. It's about stages. Stage 1. Survival. With a small account, your goal isn't to get rich. Your goal is to survive. Learn discipline, protect your capital, avoid blowing up. Think of this stage as training camp. Stage 2. Consistency. Once you can protect your account, focus on consistent profits. Even if it's just $5 a week, the habit of winning consistently matters more than the size of the win. Stage 3. Growth. When your account grows to a few thousand, you can scale your position sizes slowly. Don't jump from risking $2 to risking $200. Increase gradually. Grow with discipline. Stage 4. Acceleration. As your account grows larger, compounding kicks in. Gains become bigger without extra risk. What used to be $20 profits become $200, then $2,000. At this stage, discipline matters more than ever. Stage 5. Wealth. This is the millionaire stage, but notice, it didn't come from one magical trade. It came from thousands of disciplined trades, scaled over years. That's the path from $100 to $1,000, step by step, stage by stage. The truth about consistency, the quiet millionaire secret. Most people think trading is about finding the perfect setup, or the perfect indicator, or the perfect mentor. But the real secret is consistency. Consistency is boring. It's waking up, following your plan, risking small and repeating. It's winning small and losing small over and over. But here's the truth. Boring is profitable. While everyone else is chasing excitement, consistent traders are quietly building wealth. Look at the richest investors in history. Warren Buffett didn't become a billionaire overnight. He became a billionaire by being consistent for decades. Same principle applies to trading. The market rewards consistency, and it punishes impatience. Building wealth without blowing up your progress. The biggest threat to your millionaire journey isn't the market. It's you. Impatience, greed, overconfidence. These are the killers of progress. Think about it. You spend months growing your account from $100 to $500. You're proud. You're disciplined. Then one day, you feel overconfident. You risk half your account on a sure thing. You lose. And just like that, months of progress are gone. This is why protecting your account matters more than growing it. Never risk your progress for one trade. Never risk your future for excitement. Wealth is built slowly, and it can be destroyed instantly. Case study: the trader who played the long game. Take Daniel, for example. He started trading with $200. He wasn't in a rush. He didn't care about impressing anyone. He just wanted to see if he could grow consistently. For the first year, his account grew slowly, sometimes only a few dollars a week. Friends laughed at him. "Why waste time?" they said. But Daniel ignored them. By year 3, his account was in the thousands. By year 5, he was making more from trading than his job. By year 10, he had crossed the $1 million mark, not because he was the smartest trader, not because he had insider signals, but because he played the long game. Daniel's secret wasn't exciting, it was patience. Final thoughts. The path from $100 to $1,000 is not about speed. It's about time. It's about patience. It's about compounding, discipline, and consistency. Ask yourself, are you willing to play the long game? Are you willing to grow slowly, protect your capital, and let compounding do its magic? Because if you are, the $1 million journey is not just possible, it's inevitable. Remember this. Wealth is not built in one trade. It's built in thousands of disciplined trades, stacked over years. Play the long game, and the market will reward. Chapter 7. Becoming the 1%. The trader who outlasts the rest. Most people who start trading will quit. Not because they can't make money, but because they can't outlast the pain, the boredom, and the setbacks. The truth is this: success in trading isn't about who's the smartest, or who finds the best indicator, or who has the most starting capital. Success belongs to those who can keep going when everyone else walks away. That's what makes the 1% trader different. Why most traders quit before success. Let's be honest, trading looks glamorous from the outside. You see screenshots of profits, luxury cars, people claiming they made $10,000 in one day. But here's the hidden truth. Most of those stories are fake, or worse, they're short-lived. For every trader who posts a big win, there are 100 who blew up their account. The reason most quit is simple. They expected easy money. The first time they lose, they panic. The first time they hit a losing streak, they doubt themselves. They start chasing shortcuts. They switch strategies. They burn out, and eventually they give up. Not because trading was impossible, but because they lacked the patience to stick through the struggle, the traits of the traders who make it, so what? Makes the 1% different? It isn't luck. It isn't magic. It's character, patience. They understand wealth takes time. Discipline. They follow their system, even when emotions scream otherwise. Resilience. They take losses, but they don't let losses take them. Humility. They don't chase ego trades to prove they're right. Consistency. They show up day after day, long after others quit. The 1% traders aren't perfect. They make mistakes like anyone else. But the difference is, they learn, they adapt, and they keep going. Learning from failure. Without losing. Faith, every trader fails. Every trader takes painful losses. The question is, what do you do with the failure? The 99% see failure as proof. They can't make it. They walk away. The 1% see failure as tuition, a lesson they paid for, and they use it to grow stronger. Think of Thomas Edison. He didn't fail 10,000 times when inventing the light bulb. He learned 10,000 ways that didn't work. Trading is the same. Every losing trade isn't a dead end. It's a lesson about risk, psychology, and discipline. The traders who outlast are the ones who can take a hit, study it, and come back sharper than before. The balance of confidence and humility. Great traders live in a strange balance, confident enough to take risks, but humble enough to know they can be wrong. Overconfidence is dangerous. It makes you reckless. You feel untouchable, so you take oversized trades, and one loss wipes you out. Too much fear is just as deadly. It makes you freeze, doubt yourself, and miss opportunities. The 1% live in the middle. They trust their system, but they respect the market. They act with confidence, but they bow to humility. The market doesn't reward ego. It rewards balance. Creating a trader identity, not just what you do, but who you are. Most people see trading as something they do. The 1% see trading as who they are. It's not a hobby. It's not a side hustle. It's an identity. That means your habits align with trading. Your routines align with trading. Your mindset aligns with trading. You're not just someone who places trades. You're a trader, a professional. And when you see yourself this way, everything changes. You no longer chase shortcuts. You no longer give up after a bad month. You no longer treat trading like a gamble. You've chosen the identity of the 1%. And that identity demands discipline, resilience, and long-term commitment. Case study: the AVA trader who refused to quit. Let me tell you about Sarah. She started trading with excitement like everyone else. But her first year was brutal. Loss after loss, sleepless nights, doubt. Most people would have quit. But Sarah didn't. Instead, she asked herself, what can I learn from this? She journaled every trade. She studied her mistakes. She adjusted her risk. She learned patience. By year 3, she was consistent. By year 5, she was profitable. And by year 10, she was part of the 1%, financially free, trading on her terms. Sarah's secret wasn't genius. It was persistence. She simply refused to quit. Final thoughts: becoming the 1% isn't about being the smartest, the fastest, or the luckiest. It's about being the one who outlasts the rest. Most traders will quit. But if you can stay disciplined, patient, resilient, and humble, you'll find yourself in the rare group that succeeds. Trading will test you. It will push you. It will tempt you to give up. But if you hold your ground, if you embrace the identity of a trader, you'll join the 1% who make it, not because you never failed, but because you never stopped. Conclusion: your millionaire mindset starts today. Congratulations, you've taken the first step. You've listened, learned, and absorbed the principles that separate small account traders from millionaires. Let's recap what you've discovered on this journey. Chapter 1 showed you that mindset comes before money. Before you can grow your account, you must grow your thinking. Chapter 2 revealed the enemy within: fear, greed, and doubt. Mastering your emotions is more important than any strategy, because without emotional control, even the best setups fail. Chapter 3 taught you how to risk like the rich. Protecting your capital, managing position sizes, and applying consistent compounding is what turns small accounts into serious wealth. Chapter 4 emphasized building a system, not chasing signals. A simple, effective trading strategy that you understand and trust is more powerful than any tip or indicator you'll ever follow. Chapter 5. Unlock the Discipline Code. Habits, routines, journaling, and consistent actions build not only your account, but your identity as a trader. Chapter 6 showed the power of the long game. Slow, steady growth, patience, and compounding transform $100 into $1,000 over time. Consistency is the quiet millionaire secret. Chapter 7 taught you to become the 1%, those who outlast the rest. Those who embrace resilience, humility, and identity as a trader will achieve long-term success. Now, here's the truth. Success is not about the $100. It's about who you become in the process. The $100 is just a starting point. The real wealth is in your mindset, your discipline, your habits, and your ability to stay the course. That is what multiplies over time, long after the trades are done. So here's your challenge. Commit today. Commit to discipline over impulse. Commit to patience over excitement. Commit to growth over shortcuts. Start building your habits. Journal your trades. Protect your capital. Follow your system. Trust the process. Remember this. Every millionaire trader started somewhere small. Every single one. The seed of success was planted with humble beginnings. And the same seed can grow inside you. The journey is yours to take. The mindset is yours to build. The results will follow. Your millionaire mindset starts today. Not tomorrow. Not next week. Today, take the lessons, apply them, and let your $100, your first step, become the foundation of a lifetime of financial mastery. If you're finding value in this audiobook, make sure you subscribe so you don't miss the next lesson that could change the way you trade forever.